Welcome to TradeTheNBA.com. This is John. This report is for the 1st of August, and of course, didn't take long. Once the market realized that Trump was serious with the tariff and started signing all of the tariff orders, reality struck. No shock that Canada wasn't going to do anything. They already have the Mexico, Canada, U.S. agreement, but this is going to definitely add some strain on them. They think they can weather it. The EU, of course, did their deal, but I think that was sort of a backhanded deal. They're using Ursula as a front man, and the rest of the EU members then can later claim that they don't agree, and therefore it's not going to happen. But Trump's not going to fall for that one. That's pretty obvious. But he's putting pressure on India, Brazil. So the market concerns about those things are definitely peaked at this particularly with the market at highs. So what did we do? Oh yeah, that's right. We just filled back the positive extreme that was already there, and this is what we talked about. It wouldn't take much for any kind of news to pull us back and fill in those voids. And right now, it's putting on the 76%. It's been a long time since we were at the 76%. Think about that. You have to go all the way back here um, to the 12th of June. Oh, actually, that's May. So there you go. That shows you how long this market has been trending in a single direction. So a little bit of a mean reversion, not too complicated. Right at the threshold here of MBI White meeting, that would be a bit more significant move towards the 50%. Wouldn't be surprising at all. Uh, Given that news and the Fed being uncooperative completely, and a recognition from the earnings that in some sectors, not tech in that, but in others, there's definitely um, difficulties because those high rates make it hard for regular businesses and that, as well as real estate, to move things. And if you really want to see the economy, jump up, that would definitely have to do it. Why the Fed held off? It's all politics at this particular point. There's no other justification. The important element of it, though, is steel complete reset. So, the start of the month, when new fund money comes in, where's it going to go? Into treasuries? Possibly, because the reality is they know now that this is about the highest yield you're going to get. It's only going to get worse. So, why not lock in the beneficial rate? The problem you've got is this isn't helping, and this idea of putting the extra sanctions on, Russia, even though they've already existed, everyone knows Russia's been skirting them and working around. Trump putting pressure on the countries that are going to buy from them, that's a different story because that's China, that's Turkey, then a bunch of others, that go into that group. And, well, yeah, that's problematic because that's going to put a strain on oil supply. And that's the last thing he needs because he's been unable to see anything move on the domestic side unless they think that they're getting through those bottlenecks that were set up for by Biden. And look at we're almost we're more than halfway into the year, and it still hasn't worked out because of the bottlenecks that were set up, and we knew that those existed. So it's a dance, and he's treading a fine line. No shock here from the Euro standpoint because they recognize they're in a world of hurt, and that's a pretty significant drop off. When it comes to a currency, given the move that's taken place over the last 2 months, you literally wiped out, almost a month and a half of it in literally 3 days. And not surprising, it'll be difficult for it to hold. It might have support now, given this tariff situation, but I don't see how that helps the EU in any way, shape, or form. It's only going to put strain on all of the biggest players within the EU as far as exports go. So that's the reality of it as well. From a gold standpoint, again, that lack of inflation problematic for it. It's also going to be problematic because depending on where the U.S. ends up deficit-wise, and that Bitcoin suffers a little bit more than ETH simply because ETH has got the bonus with the stable coins as a definite mover that's attracting attention because of the legislation that's moved through and the regulation changes. So you kind of that split where last time it was Bitcoin that was moving, now it's probably going to be ETH that will hold the lead. They still suffered the same setback because they typically go with where the market does. What was interesting about the move is from where we had our previous white MBA spike at 50%, and the cross below magenta, perfectly timed there, moved to the zero and below. Then we got this run up, but then you got the MBI white spike, boom. You still had magentas. This is a little bit more difficult. So that's where we always look at the DOC, and this is an interesting correlation that's important to watch. You're going to get DOC spreads that'll happen a little bit more frequently than you will MBI white spikes. The key is looking for the matching component of having the MBI magenta below yellow during the same time you get an MBI DOC here. And that's going to be reflective of where you're going to start to get your increase. And then what we look for is when you reach that 50% point, where are we at? Okay, well, we had magenta below and then MBI white rising and actually took over yellow at that particular point. You got a brief spurt, but as soon as it crossed back below, you were still in that same situation where you had steel crossing below. So it's those crossovers you see that become the trigger points. And those are what you look for. And in this particular case, that's steel going below cyan, with cyan well above red and fading. Yeah, it was a clean move with the MBI white all the way down to the 0%. You had a brief attempt of move back up, and it crossed above MBI white, which got you back over the 23% just briefly. Then took back the lead, and there was no correction from DOC reading. So this was never going to produce anything other than just an opportunity to short again because of the depth of that. And you follow the shakeout with that. You know, if you have a turnaround in the shakeout histogram, fine. But when it's continuing to decline and you see that kind of bounce counter to where it's going, it's still going to fail. And sure enough, it failed epically. And yeah, MBI white even at the 0% this particular thing. So again, once again, you have that beautiful jump right there. Now the key is does steel remain above the DOC side? As long as it does, this trend will continue, and that becomes your focal point when looking at this. And that just is going to continue across, and that's what gives you your understanding of trend moves within a particular signal color, and colored it correctly from the beginning of the move and hasn't changed. So despite the noise in between, the trend overall was recognized by the algorithm and maintained it. And this is the European session is mostly where this dump is taking place. It happened a little bit later in the day. It was a steady decline, and as they knew that Trump was going forward with those tariff signatures, all of that went through, and of course also killed all of the call options that were taking place. So they're going to have a sad Friday for option expiration within that. And you can see in the Asian session, not a whole lot happened. But then as we moved into the European, yeah, that's been an ugly setup going forward from there. Nothing out of the ordinary, but definitely going to be a little bit more rocky as we go forward. In particular, we could keep an eye on that oil situation because that really determines things. The Fed postponing, it just delays any opportunity at recovery. Now you're looking at the earliest end of the year, maybe the beginning of the year, if things start to turn around from that standpoint, assuming that oil gets under control. So you see we have these dynamics. Everything's relational. You can't look at any one and say that's going to be the thing. That's a fallacy that they tend to want to focus on any one in particular thing. These are all relationships and how they impact one another, and that's why a lot of the economic activity that we talk about in certain places becomes regulation. It becomes the relationship between what type of economy those areas have, and that's why you get such irregular growth within the U.S. in particular, as well as the world. It varies accordingly, and you have to stay on top of that dynamic. Yeah, it's pretty straightforward to see here from this setup, even from the 5-minute chart. I mean, as soon as it turned red, yes, it took a little bit of time before that happened, but consistently followed it through. So it's just a key insight in looking at the MBI in relation to the DOC, and something worth noting, particularly as you watch a shakeout in the negative zone. You can get those similar readings with a positive shakeout, and you're going to have less negative authority because of that positive shakeout, as well as rising momentum with the histograms. And that's why we always look for rising gold, because that sets a trend tone for strength. So you just have to wait for it to start to begin its fade, and once it does, that's where your opportunities come in to capture near highs before decline. That's the long and the short of it for now. As always, anything relevant, I will put it on the team chat. Have a good one. Trade well.